Next provision, transactions with persons located in notified jurisdictional area, section 94A. Very simple provision. I will make it very simple. We can just finish it off in the next 5 minutes, this provision. So this provision simply says that if any transaction happening in the notified jurisdictional area, then this section 94A provisions are applicable. So what are the provisions we are going to see? First of all, what is notified jurisdictional area? That we need to understand. So for implication of this transfer pricing provisions as well as the double taxation avoidance in the DTAA provisions, to effectively manage those provisions, effectively drive those provisions, exchange of information is very crucial. So India needs information from the foreign countries. Okay, sometimes income tax authorities will go and ask the other IRS officers like income tax authorities there, and ask the specific information. At that time, the country has to cooperate and give the information. What if the company is not cooperating with the Indian government and not providing the information and not ready to sign on any agreement, any document, etc. In those cases, what central government will do is central government will notify that particular area, the particular country as a notified jurisdiction area. Okay, notified jurisdiction area. If I give you an example, there is a country called Cyprus, which is in the Middle East. You can search it in the Google. So this country is in the Middle East. So till early 2017, this country was notified as a notified jurisdictional area. That means they are not cooperating, they are not giving the information to Indian government. So in 2017, after complying with the conditions, etc., so what they have given a retrospective amendment. They removed this country from the notified jurisdictional area. Now the Cyprus country is not in NJA, not in notified jurisdictional area. Okay, so this is just to give an example to you. So if I made a transaction with NJA, okay, understand the NJA provisions. If I make a transaction with NJA, what are the consequences? What will happen? So that was given in detail under this provision, section 94A. So what are the consequences? The first consequence and an interesting one is that if you had a transaction with a person located in the NJA or entity located in the NJA, or even the permanent establishment which is located in the NJA of a foreign company. So for example, the foreign company is in the USA. It has a permanent establishment in the NJA. For example, Cyprus. In the Cyprus country, they have a permanent establishment. And Indian SSC, Indian company, is having a contract with that PE in Cyprus. So then also it is said to be a transaction with a notified jurisdictional area. Person in the notified jurisdictional area. What will happen is the transaction between these two companies, that is, for example, Indian company and a company in the Cyprus, both are said to be associated enterprises. And this transaction is said to be international transaction, and both these companies are said to be associated enterprises, even though there is no control ownership, whatever associated and deemed associated definition, even if it is these two are not falling into the definition, still these two are considered as associated enterprises. So when I say associated enterprise, these are complying, that means these two entities are coming under transfer pricing provisions, right? So all of the transfer pricing provisions, like methods of complying the CUP method, all the methods, whatever methods are there, assessing officer has a power to implicate chapter 10, that is transfer pricing provisions, to assess the arm length price of the transaction between these two parties. So whatever transfer pricing provisions are there relating to the methods, relating to the range principle, relating to the mean concept, etc., whatever is there are applicable here. So that is the impact of transaction with the notified person in the notified jurisdictional area. So not only this, for example, you take a consultancy, you take a royalty. For example, you take a royalty from a person who is situated in the NJA location, and the TDS that you need to deduct, for example, the TDS is 10%. 10% you need to deduct. But what this 94-year provision says is, instead of deducting 10%, you deducted a higher rate of 30%. Higher rate of 30% TDS you need to deduct. So if I go and see this point here, higher rate of TDS 30% plus health and education cess of 4% is applicable for payments made to persons located in NJA. This is notwithstanding any contrary provided in any other provision. So TDS provisions are not applicable here. If you are dealing with a person in the NJA, then you have to straight away you need to deduct 30%. 30% is the TDS. Okay. Now, next point number 5. Interesting point. SSC receives any amount from a person located in NJA if SSC fails to explain the source of this money in the hands of persons located in the NJA. Important point to be noted. Not in the he need not explain the source of this income to the in his hands. He has to explain the source of that income in the hands of the NJA person located in the NJA. If the person located in NJA gives some money, for example, 10 lakhs money to the person resident in India, and this person resident in India has to explain this 10 lakhs how that person in the NJA has got it, which business that he is doing, what kind of business that he is performing in the NJA to get this money. He has to explain that. For example, if he fails to do so, he doesn't know how that person in the NJA got this money. So in that case, what will happen is such amount, if he fails to do so, such amounts will be treated as income of the SSC itself. That person who received the 10 lakh in India deemed to be that person's income only. Then in that case, that will be assessed. That will be assessed as his personal income. So this is the point number 5. Now, sometimes assessing officer needs additional information from the person. If there are transaction between NJA and the SSC, in that case, assessing officer asks the additional information, and SSC needs to provide within the timeline specified in the notice that additional information. In summary, what is this provision is all about? Section 94A. Section 94A says that if the assessee is dealing with any person, any transaction with a person in the NJA, the same needs to be treated as a international transaction, and both are treated as a associated enterprises, and all the transfer pricing provisions are applicable. That was covered in the point number 1 and point number 2. Here one more important point. When I say all the transfer pricing provisions are applicable, there is one exception. There is one exception to this rule. So if you remember the mean concept, if there is a difference between ALP, arm's length price, and the transaction price, actual transaction price, if that deviation is only 3%, then we used to ignore that. We need to ignore that. That was there. But in this case, the transaction with the NJA, that beneficial rule also not applicable. That's what I has provided in the exception. 92 subsection 2 is related to the benefit of permissible variation between the ALP and the transfer price. That is 1% in case of wholesaler and 3% in case of others is not available to the transaction with the person in the NG. This benefit also not available. And except this, all the transfer pricing provisions are applicable. And these provisions are applicable to PE of a foreign company which is situated in the NJA. And this is all about, we have covered all the 6 points. This is all about what is section 94A. We are going to solve a simple question from the study material to understand this better. We are going to solve question number 8. Question number 8 is a simple question from the study material. This question says that Mr. X, a non-resident individual, is due to receive interest of 5 lakhs during March 2022 from a notified infrastructure debt fund eligible for exemption under section 10 subsection 47. He incurred expenditure of 10,000. Assuming that Mr. X is a resident of NJA, that is Notified Jurisdictional Area, discuss the tax implications under section 94A. Read with section 115A and 194LB. So under section 194LB, for these kind of transactions, the Notified Infrastructure Debt Fund, the concessional tax rate of 5% is applicable. So concessional tax rate of 5% is applicable under section 194LB. So, but in this case, the key point here is Mr. X is a resident of Notified Jurisdictional Area. He is a non-resident in India, but he is a resident of NJA. So in this particular case, what if, when we are paying the amount, this Notified Infrastructure Debt Fund, whoever is managing this debt fund, when they are paying this amount, this interest amount to Mr. X, how much is the TDS that they need to deduct? They have to deduct straight away the rate of 30% plus education plus health and education cess they need to deduct, right? 30% plus health and education cess that they need to deduct. That is the key point in this question. There is nothing else in this question. It's a very basic and simple question. I hope you understand section 94A, very simple provision and not much focused in the examination, but they may ask the question. If you ask the question, you are lucky. It's a very simple provision.